Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart. This is a continuation chart. And what we saw yesterday was a real acceleration into some news articles and some other things that seem to allude to the fact that the Fed today at 2 o'clock is going to continue things as they are, for a period of time that makes the markets happy, that they're not going to take the proverbial punch bowl away too quickly. Yesterday's move presumes just about all of that. So I personally will be very interested to see what happens at 2 and then at 2:30 during the press conference. Don't game the Fed. Wait for the reaction, wait for the statement, see what's happening, and go from there. What price did yesterday was recall how tight the Bollinger Bands are. They are extremely tight. They've spent 2 days feeling out both the 50-day exponential moving average and the third standard deviation Bollinger Band. Okay. Then on the positive news and the positive rumors, really ran through all of the areas that I was looking at, a day ago. They ran through the weekly pivot down in the 82 area. It ran through the middle band, the 20-day simple moving average on the December contract, and it ran right up to the continuation middle band. We did as high as 94.5. This morning, we've lingered up here. What will be very interesting for me is to see if the Fed will take us back over the middle band. In looking at this uptrend, it's very likely that the bears are, just about ready to drop the ball again. And if they do, then we're looking at a trip back up to new highs. That is expecting the market to do what the market has done very consistently over the last 2 years. The bears push an issue lower. They get themselves in a situation where they could turn the market substantially lower. A bounce happens. A bounce turns into a multi-day rally. It goes back up to the middle band there, the green line, and over a period of 1 to 2 days, the bulls win back the green line, turn the green line into support, and we go to highs. That's been the game plan since New Year's Day 2013. So if that green line gets converted, then I'm going to want to be long, both on short and intermediate term time frames, and I would be looking for new highs because the bands are tight enough now where, getting back up there, breaking through the continuation high. I'm not concerned with the contract highs. I'm really not, in neither of these bands. It would be a move back up to test 2011, and then you would see expansion out of the bands and a Bollinger Band ride higher. That's the expected setup based upon the uptrend that we're in. That's the expected setup based upon that. Okay. Now, the one thing that concerns me, if we are up on all of this stuff about the Fed, and the Fed doesn't deliver exactly what everybody wants, or doesn't give everybody a little extra to keep them wanting to push things higher, then what we could see is middle band resistance, which we really haven't seen much of in the last couple of years. But when we did see it back in 2010, 2011, it was a very powerful thing. And it tended to shut the door on the mini and turn it into a future that wanted to trade between the middle band and the lower band. And that's a sell rallies type of environment. If we get that scenario and we spill lower and we get a lower Bollinger Band ride, I would expect that to, go, whichever way we ride. And we're going to ride with bands that tight. Whichever way we ride, we're going to ride for a while. So, bottom line, today's a big day. And it's a big day for all the reasons that that you thought it was going to be a big day, but it's a big day for the charts too. And we'll have to see who wins this battle of the middle band by 4:15 today. All right, everybody have a good one. Check us out on Twitter at Princeton Trader. Check out the website, princetontrader.com. Come check out the chat room. We would love to meet you. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.